Hi, I'm Kevin Flanagan, Head of Fixed Income Strategy at Wisdom Tree.
And I'm Jeff Weniger, Head of Equity Strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets. Hello, thank you everyone for tuning in once again to the Minds of the Markets. You know, Kevin, we've been doing this for a little bit more than a year now on YouTube. And for those of you who see us only on YouTube via this format, remember that we also have the write-up that appears on the Wisdom Tree website every couple of weeks. And this time around, we made Kevin do the whole write-up. Kevin wrote it. And you were talking about the labor dynamics in the United States. And that has been something, Kevin, that has really confounded a lot of people. You had some people that were grizzly, all these tariffs are going to see a lot of job losses. But thus far, I don't know, maybe you have a different view. Thus far, everything seems like we're at least here in summertime in a satisfactory situation on the U.S. labor front.
Yeah, right. I mean, the more things change, the more they stay the same, right? I mean, that's kind of what we're seeing in the data. Now you did get some reports, ADP, that measures private employment, jobless claims, showing some increase the last couple of weeks. And it really came down to the monthly jobs report. But the markets were anticipating softer than expected news. So actually, when you look at that ADP report, it showed its weakest gain in 2 years. And claims, so even though they're up 2 weeks in a row, they're still about 100,000 below where they normally are to start a recession. So that was your referendum for the May employment report. The second report, by the way, we got essentially post-Liberation Day. Now, are we out of the woods? No, we're not out of the woods. But to your point, Jeff, in the opening, so far, so good, right? And I think that's what's important because that's what the Fed is looking at right now.
Yeah, and make sure you're liking and subscribing here because we're doing a lot of macro on these calls every couple of weeks when we do the recording. It's always very timely. And now let me ask you this here, Kevin. We have I mean, with the inflation front, I mean, where do we even go from here? Because you don't know how much the tariffs are going to trickle in just now. But what's the situation in terms of wages in the U.S. economy? Is that something that's going to cause us to have a sticky situation for, let's say, for the CPI into next year?
Well, surprisingly, wages, it's measured by average hourly earnings. For those of you who are into the data, into the numbers, they actually surprised to the upside for the month of May. So we'll wait and see how that kind of plays out. You know, another aspect to this has been the role of the immigration status. And we're not political here. This is strictly on the economic side. You know, you had seen a wave of the immigrants coming in, taking those lower paying jobs. So if you do actually see some of that pulled back, what does that do? We saw it during COVID. You kind of skew things to the upside. So these are the kind of nuances the Fed's going to have to continue to parse their way through when they look at the numbers. But I mean, to your question on inflation, that, you get the jobs numbers and it's like, okay, let's turn the page. What is CPI going to do? And you do get the sense, and the more that I read from actual economists out there, that we may begin to start seeing some of this impact on numbers like CPI. Remember, Fed Chair Alan Greenspan back in the day said CPI was like looking in the rearview mirror. So it wouldn't surprise me if, in fact, you begin to start to see some of these price increases trickle their way through the official numbers from the Bureau of Labor Statistics. And once again, that's what the Fed's got to juggle. Employment, inflation, their dual mandate.
All right. Okay. You're mentioning the Fed. All right. So what is the Fed going to do in your opinion? And then what is the street consensus saying, let's say for the rest of calendar 25?
Well, I mean, it would appear that the Fed has their dot plot at 2 as we're speaking right now. Could that change to 1? Yeah, it could. If you actually look at how the dot plots have been coming in. So 1 to 2 rate cuts this year, it's kind of where the market is. It's interesting to see both of them coalescing together.
Okay, well, I think that's going to do it for today. Now, look, guys, you can see I'm looking at Kevin right now. He's got the little Wisdom Tree logo. That's the ETF house that we work for. We've both been here at Wisdom Tree for 7 or 8 years, so make sure you're going to the website, seeing what we have on offer. And, of course, tell your friends, tell your family, don't tell your enemies. about the Minds in the Market series here on YouTube. And thank you for liking. Thank you for subscribing as we just passed, Kevin, a 1-year birthday. That'll do it.